Hello everybody, my name is Alesh Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. I have an investing thesis based on demographics. In the long run, developing countries, also known as emerging markets of the world, such as Vietnam, Cambodia, and Thailand, will outperform developed markets. They have a young, growing population that will work for a long time and gradually be lifted out of poverty and become a middle class that will want to consume products and services. It is much easier for local companies to increase their sales and profits when they have a growing, more affluent population to sell to. These countries, from personal experience, can improve their productivity significantly, even with the most basic technology, increasing people's productivity, pay, gross domestic product, and company profits, most importantly for investors. Developed countries have reached diminishing returns with technology where it becomes cost prohibitive to add more technology. Investing in the EM world will, in my view, be profitable because of demographics, the application of technology, but also because EM stocks have underperformed the US for the last 10 years by close to 10% per year, something which is unlikely to continue in the long term. One of the reasons EMs have been cheap is just expectations and their being in the penalty box with investors who are simply not willing to pay as much for them as for developed country stocks like the US, where the price investors are willing to pay for a dollar of profits, the PE, is lower for emerging market stocks on the average than the average for the S&P 500 US stocks. US stock PEs are also above their long-run average, while the emerging market stock PEs, already lower on the average, are also below their average. Lastly, in 2023, the US market capitalization was 61% of the world stock markets, partly because of the overpricing I mentioned, but Credit Suisse predicts that by 2030, the US will be down to 35% of the world market cap, and Canada is going to go from 2.8% to 2%. Lastly, investing outside of Canada and the US is a good way to diversify your portfolio, although one could argue that the S&P 500 holds global companies that do business around the world already, certainly for diversification and perhaps getting a little help from the demographics I mentioned earlier, but certainly not as much help as the local companies. Further weakening in the US dollar, continued emerging markets growth expectations, and slowing inflation may provide further tailwinds for EMs in 2024. This presents a unique opportunity to invest in rapidly growing emerging market economies, trading at historically cheap levels, while also adding diversification to your portfolio. Now, let me mention that my investing thesis is something I am using for my investing and would encourage you to research and develop your own investing theory for yourself. If you have any requests on what you would like me to cover in future videos, please put that in the comment section. If you'd like to get in touch, please reach out on any of these social media channels, and may you have a profitable day.